Hi, friends. Professor Joe here. I hope you all are doing great and welcome to this video. In this video, we are going to discuss double top and double bottom. And by using RSI divergence, how you can make sure that you are able to take good trades with the combination of RSI divergence and double top or double bottom. Now remember, this trading strategy is a great trading strategy, but you need to understand every single detail about this strategy. So make sure that you do not skip the video and watch till the end so that you can understand this strategy very, very well. Yes, friends, and if you're still not subscribed to my channel, kindly subscribe to my channel and ring the bell icon. I keep creating a lot of educational videos on trading, stocks, crypto, options, and topics related to this. So, whenever I will upload a new video, you will be the first person to be notified. Let us get back to our topic for the day. So, first, let us understand what is a double top. So, a double top is a resistance zone where the price comes once, retraces back down, again goes back up to that resistance zone and retraces back down. That is an area what is called as a double top. That zone is a very important zone. It is basically a resistance zone. This is how it looks. But how do you make sure that from this zone the price is going to go down? So that is where the RSI divergence is going to be useful. Let us understand what a double bottom would look like. A double bottom is a support zone where the price comes once, bounces back up, again comes back down to the same zone and bounces back up. So that is basically a support zone and a double bottom zone. Same, we are going to identify the best double bottoms and the double tops using RSI divergence. Now, whenever you want to trade double top and double bottom, there are some rules to be followed. Number one rule is try to pick up double tops and double bottoms in the trend. Yes. Normally, when people say that pick up a double top or a double bottom, you are thinking that, oh, it should be at the top or it should be at the bottom. It can be. But if you really want to get a better win ratio, it is better to pick up a double top and a double bottom in the trend. I will show you how it is done. Once you pick up a double top or a double bottom in the trend, then the second part is you need to identify a RSI divergence. Third step is to identify a good candlestick pattern over there, like a bullish candlestick pattern for a double bottom and a bearish candlestick pattern for a double top. And then you enter into a trade with a stop loss either below the support zone or above the resistance zone. So let us have a look at a simulation first and then we will have a look at the charts. Before we go ahead to the simulation, I also want to tell you there are different kind of divergence. The first type of divergence is called the regular divergence. People also call it the classic divergence. This is normally found on the extreme top and extreme bottom of the charts. And this is how it looks. You can see that the price is making a higher high, but the RSI is making a lower high. The second type of divergence is called as the hidden divergence. A hidden divergence is found within the trend. So you will see in a bearish trend, the price is making a lower high, whereas the RSI will make a higher low. They'll make a higher low. The price will make a lower low when the trend is bearish. And when the trend is bullish, you will see that the price is making a higher low, but you will see that the RSI is making a lower low. Okay, so this is a difference between a classic divergence or a regular divergence and a hidden divergence. But today, what we are going to talk is about the exaggerated divergence. This is used at double tops and double bottoms And you will see in the double top, the price is making a similar high, whereas the RSI you will see is making a lower high. And in the case of a double bottom, you will see the prices are making similar lows, but you will see that the RSI is making a higher low. This is what we are going to identify in this double top and double bottom strategy. And the next important part is what kind of candlesticks are you looking at? So when you are looking at a double top, you are looking at bearish candlestick patterns. Like you're looking at a bearish engulfing pattern or you're looking at a shooting star. These are bearish candlestick patterns, which tells you that the market psychology is bearish and the chances of the price going down is very, very high. At the same time, when you're looking at a double bottom, you are looking at a bullish engulfing candlestick pattern or a hammer candlestick pattern, because this tells that the trader's psychology is the price is going to go higher from here. So these are the three things you have to check before you enter into a double top and a double bottom trade. Number one is the trend. Number two is the divergence in the RSI. And number three is the candlestick pattern. In case of a double top, the first thing you have to see is that the major trend should be a bearish trend. Something like this. The price is coming down and then it goes up, but it does not go beyond the previous highs. And then it is creating a double top over here, which looks something like this. Remember, the price is coming back to a resistance zone at the same level, but the RSI is making lower highs. This is how it will look. At that same time, in that resistance area where the price has gone twice, maybe even thrice, you are looking for bearish candlestick patterns like bearish engulfing pattern or a shooting star. That clearly shows that the psychology of the market is to push the price down. And this is where you will enter into your trade for a sell with your stop loss above the resistance zone. Similarly, when you're looking for a double bottom, you are looking for an uptrend. And while the trend is in the uptrend, you are looking for an area where the price retraces back to a support zone. Something like this. The price came to the support zone, went back up, again came back to the same support zone. While the price is at the support zone, you are looking for an RSI divergence where the RSI is making higher lows. Something like this. So the price is making similar lows and creating a support zone, whereas the RSI is creating higher lows. In this area, when the price has come back again to the support zone, now you are looking for bullish candlestick patterns like bullish engulfing and a hammer. This shows that the psychology of the traders at this zone is very bullish and they are going to push the price up. This is where you are going to enter into a buy trade with your stop loss below the support zone. So there you go, friends. Currently, we are looking at Euro USD chart and it's a 4-hour chart. And first, we will look for double tops, and after that, we will look for double bottoms. Okay, so in this Euro USD chart, you're seeing that over here you can see a downtrend. So in a downtrend, it is easy to find a double top. But before we find a double top, we also need to put an indicator, which is the RSI indicator. So let us go to indicators. There you go. Those are the indicators. You click on the indicator and you put RSI. You click on RSI divergence indicator. So there you go. You have got the RSI divergence indicator. You can see. But I personally like to pick up the divergence rather than getting it ready made. So what I will do is I will remove the plot bullish and plot bearish divergence, and I will reduce the RSI period to 10. Very good. So I have reduced the RSI period to 10 and I have removed plot it automatically. I will find it. I click on OK and there you go. So now I can see that the trend is bearish. So we can see very clearly that the trend is coming down, going back up, came back down, and then going back up. So it's pretty clear that the trend is bearish. At this particular area, you can see that the price has come twice, almost thrice in the same resistance zone. So our first condition is met. It is in a downtrend. Now you are seeing the resistance zone. It is very, very clear. So you can see the price came once, came back down, went back, came back down, went back. So this is an area where the price has come almost the third time. It is very clear that the RSI, there is a clear divergence over here where the price kept coming to the same resistance zone, whereas the RSI is making lower highs. Very, very clear. So our third condition is met. Condition number one was a trend. It is a downtrend. Condition number two, a good resistance zone where the price has come twice. And in fact, in this case, it has come thrice. Under that, at the same area, you are seeing that the RSI is making lower highs. And our fourth condition is very simple, whether there is a good candlestick pattern, and I can see that there is a very, very good candlestick pattern. There is a very good engulfing pattern. And even if you see this candle, this green candle, it is looking like a shooting star because it has a long tail to the upside. And the engulfing candle, both together, is clearly saying that the trend is going to be bearish from here. And now you can see how much the price has gone down from this area. So let us take a trade simulator, a short position, and we put it over here. So I will take after the engulfing candle, keep the stop loss above the resistance zone, and then I will drag down. So you can see the stop loss is 136 points and the distance it has covered is almost 679 points, which is almost 5 times. So this is a great trade. When all these things come together, this is the best opportunity for any single person to enter into a trade. Now let us look for a double bottom. So where do we look for a double bottom? Number one, there has to be a trend. So let us find a trend first. There you go. Here you're seeing an uptrend has just started. Okay, so the price came up, came down, went back up till here, came back down, went back up, came back down to the same support area, went back up, came back down to the same support area. You can see that the price is in an uptrend and the price has bounced 3 times in the same support zone. Now the next thing that we have to see is the RSI. Is it giving a divergence? So let us check the RSI below it, and you can clearly see that at all these 3 points, the RSI has made a divergence. Where the price is coming down to the same support zone, the RSI is creating higher lows. The RSI lows are keeping going higher and higher and higher. This is a clear indication that the price is going to go up from here. Now, the fourth requirement for a double bottom trade. What is it? The candlestick pattern. So let us see if we have a good candlestick pattern over here. And there you go. We are looking for a candlestick pattern over here. And here you can see that number one, there is an engulfing candle. And number two, there is a good hammer. So all the four conditions of a double bottom trade is met over here. Now let us see what is the profit that we are going to get in this trade. So I pick up the trade simulator, go for a long position, and there you go. I put the stop loss below the support zone. So you can see the stop loss is of 57 pips and the price has gone 389 pips, which is almost 7 times. I'm sure that you will not pick up the entire 7 times, but still you will easily get 1 is to 2, 1 is to 3, 1 is to 4, 1 is to 5. So this is a great risk to reward ratio. And when you look at all these four parameters, the trend, the double top, double bottom, the RSI divergence, and the candlestick patterns, your win ratio will surely be above 60%. Now, friends, I hope that this explanation has made it very, very clear that how you are going to identify a double top and a double bottom. There are just three rules. Try to pick up the double tops in the bearish trend and try to pick up the double bottoms in a bullish trend. Second, look at the divergence in the RSI. If there is a divergence in the RSI, it's a perfect entry point. Also check for candlestick patterns. If it's a double top, look for bearish candlestick pattern. If it's a double bottom, look for bullish candlestick patterns. Now, double tops and double bottoms in the trend with an RSI divergence is a strategy that will surely give you at least 60 to 70% win ratio. Yes, but the best part is the risk to reward. If the risk is 1%, the reward can be 4, 5, 6%. Yes, the risk to reward in double tops and double bottoms in trends is very, very high. You will not find these trades every day, but whenever you will find this opportunity, grab it. But to grab such opportunities, you need to have a lot of patience. You need to spend time in the markets. You need to practice and you need to be persistently available in the market. These are some things that are needed to become a successful trader. These tricks you will not acquire overnight. You have to practice and spend time in the markets. Friends, I've written a book, Traders You Can Win, but First Learn to Lose. This book talks about taking small losses when you're wrong and take big profits when you're right. It's a small book, but a wonderful book with a lot of information about technical analysis, trader psychology, and a couple of trading strategies. If you're interested, it's available on Amazon and Kindle. Friends, if you love the way I'm creating these videos, please like and share these videos. So like you, there might be many others who are looking to learn trading the right way. These videos will surely help them to develop their trading skills from one level to the next level. Finally, friends, I have created a lot of videos and I'll be creating many more videos in the future. If you're still not subscribed to my channel, please subscribe to my channel and ring the bell icon so that every time I create a new video, you will be the first person to be notified. Friends, all I can say is keep learning, keep growing. Thank you. Namaskar.